Hi everyone. We have been talking about tech IPOs and whether it is an opportunity to invest and make a lot of money in these tech companies. So, as part of the series, we have part three now, where we are going to talk about why tech companies are always valued highly. So, in the first part of the series, we spoke about what are tech companies, how it's happening in US. So, in part two, we discussed about the tech companies' performance in USA. How are they performing? Do they continue to remain profitable? All those were discussed in part two. So now in part three, we'll talk about companies' valuation. Why these companies are highly valued, even though they are not profitable. The first thing is huge opportunities. So the tech industry has just started to explode, and there is a huge migration happening from traditional systems towards online applications, because of which all these tech companies continue to command huge premium and very high valuation. So the opportunity size is actually very huge, and the companies providing tech uh, products are continuously showing very high growth. So sales growth continues to remain high, revenue growth continues to remain very, very high. So they don't care too much about EBITDA margins, operating margins, or profitability at this point of time, where the scope for growth is very high. If you look at the Indian e-commerce market, it is estimated at a market size of $125 billion in 2024, which is very massive, and it is expected to reach $550 billion by 2035. So the growth it can show 3x growth even from here, 3 to 3.5x growth even from current levels in the next 10 years, which is actually very huge. So the huge opportunity size means companies tend to focus on capturing as much market share as possible. And some of these are sunrise sectors like online policy companies like Policy Bazaar, Zomato, Nike, Paytm. So all these are new age tech companies that are present in the sunrise sectors where the VCs, PE firms are ready to pay very high premiums in the beginning itself, and they get extremely rich valuation even when they have been working as a startup, be it in the seed round or in the Series A round. Even then, these companies command a very high premium and have a very high valuation because they have the potential to grow very high, very, very exponentially because of this market size. As I said, $550 billion is what is the market size expected for just e-commerce. So, in general, the tech sector is expected to grow rapidly and is expected to become a mainstay of Indian economy in the future. Just like how US index is now driven by tech stocks, seven tech stocks drive them: Nvidia, Netflix, Amazon, Facebook, Meta, Google, and a couple of other large companies. So in India, even we might see something similar in India in the long run, because even Reliance is becoming a tech company. They are focusing on data and technology instead of just petroleum. So the other reason for these companies to get high valuation is scarcity premium. So there are very few companies operating in a specific space and they are doing well. For example, if you look at the food delivery space in India, only there are two options now. We had so many options in the beginning. Now we are primarily having two options: Zomato, Swiggy. The same way in the ride sharing app space, we primarily have Ola and then Uber. Maybe Rapido can be added, and then there may be some local players who are doing well. But in general, the number of opportunities, the number of companies that have been able to survive and continue to have some market share and to continue to run a company is limited. Even Ola is now focused on Ola Electric. So there is a scarcity premium attached to all these companies. So it means that there are very limited opportunities in this segment. So if you look at any industry, you will have a lot of players listed in the market. Whereas if you look at the tech space, we'll have hardly 10 to 15 companies listed in this space, which is why they'll continue to trade at a premium. So they continue to focus on growth. So to build a sustainable business model, companies must have customers who can be served in the long term, who can continue to use their product in the long run. So the focus is always on growth. So profit always takes a backseat in terms of tech companies. So that is another reason why companies do not focus on profitability, but they get very high valuations. There are investors who are ready to pay them and keep them at a sky high valuation. So the other biggest advantage with technology is scale. All these tech products, you don't need too many employees to serve several thousand customers. For example, if you look at a company like TCS, you need to increase the headcount as you keep adding more projects. So you only have 2 lakh plus employees. This has further gone up now. So WhatsApp only had 52 employees when it was actually used by billions of users and it was acquired for $19 billion, but just 52 employees. So scalability is one more important metric when it comes to these companies, why they are valued very highly. And there is always a focus on acquiring customers and get them used to the platform. So once the user comes in, there is cost of acquiring a customer is very high. Now, but the lifetime value of the customer is exponentially high and far higher than the cost incurred to get them on board. So the market continues to remain huge, and these companies continue to focus on acquiring new customers, and they continue to remain richly valued. So the other important puzzle is this. So these companies get acquired for astronomical valuations. You look at Amazon, it acquired LinkedIn for $26.2 billion, which was the highest acquisition at that time. So recently, Google acquired Wix for $33 billion. So even Salesforce acquired Slack for $27.7 billion. Do they have that much revenue? Do they have that many customers? Do they have such a big team to care? All these are questions that can never be answered because all these companies get acquired for huge numbers. Facebook acquired Instagram for $1 billion, which is a master stroke. Today, everyone is stopping to use Facebook and they're using Instagram, where everything is happening right from social media, right from marketing, business, etc. All are happening through Instagram. So Facebook also acquired Meta also acquired WhatsApp for $19 billion when it had 52 employees and just and close to zero revenue. So they were not making any revenues at that time. They only had data. They did not have ads either at that time. So all these questions, because it is always difficult to value tech companies. Why do they get acquired at such high prices? Why do they remain listed at high prices? All these questions are always going to be there. So market tends to value high growth companies at very high multiples. So this continues to remain the mantra. So the question is this, should we just think about valuation? Should we just say that all these Indian IPOs are highly valued? I'll not buy them. Or do you want to miss out on these opportunities? So these are some of the companies. Some of them have already got listed, like Zomato, Nykaa, Delivery, Policy Bazaars, Ixigo. Some of them are going to get listed soon. So we look in detail about each Indian tech company, how to value them, whether it is an opportunity for us to invest in them. This will happen in our next video of this series. Thank you. So if you like this video, please share it with others who are interested in it. If you have any questions, post it as a comment under this video. If you are interested in knowing more about Indian tech IPO space, subscribe to my channel for the next set of videos. Thank you.